Everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some more of the stocks that were in play today. Okay, so first up is ECYT. Nice close today, closed up nearly 42%. Notice RSI is up here at 84 and Fasto's at 95. They're both hitting prior resistance levels, so getting frothy on both indicators. You know, big breakout on plus DI there. And so on the daily chart, if you look down here at the volume bars, you can see a giant volume spike today. This is the largest volume since back in November. So this has been a nice strong uptrend, and today there was the giant push back up to this October high close resistance level, and so the 620 close is the key level to break. You can see it hit that level and pulled back today. If it fails to get above 620, you'll know that's a temporary top and the candles could work back into the bands. You want to see the candles hold. You know, there was a prior channel here. I guess you could tighten it up right here, but basically you want to see the top of the channel, which is this candle here. You want to see that hold, which is 540. You want to see it stay above 540 on a pullback. If it drops below 540, the candles will likely work back into the bands, and then you have EMA4 down here at 479 as the next support level. So a close above 620 would signal it wants to head higher. A drop below 620 signals the candles will likely work back into the bands. If you look here on the weekly chart, this is the ECYT weekly chart. You can see it was in a multi-year downtrend, and then it had the giant spike in October, pulled back. It found support down here at the 150-week moving averages, and then it had a big multi-week run. And so as you can see on the weekly chart, it's right back at that October close. It's just above it. So if it can close above that level for the week, this week's candle will not set until the closing bell on Friday. If it closes above, that should signal it wants to head higher. If it drops below and that turns into resistance, then that could signal a temporary top. You can see it's hitting the upper Bollinger Band right now, that solid purple line. The next key level to break above is up here, this 300-week simple moving average at 682, and then now it's hitting. You have a resistance from back here in 2015. There's this tight channel, and then this is a big resistance zone from 2014 as well. And then if it gets above that, you're looking at a break up here on 2014 750 level. And so first off, though, it needs to break above 6 and then get above 682. So this is a huge level on the chart. It needs to close above for the week to head higher. Okay, let's look at ETSY. So this is another stock that made a really nice move today, closed up 20%. It is frothy as well on RSI and Fasto. They're both at overbought levels. As you can see here, it was breaking out on plus DI. Today there was a big gap up open. You can see the big space between this candle and up here. And today's candle is floating above that upper Bollinger Band. The upper wick does show some profit taking. If the candles do work back into the bands, EMA4 at 2275 is the key level to hold. You can see there was a giant volume spike today. So this was a huge move. It had the gap up open and it was able to push higher. It's going to have to break that 26 resistance zone. If you look here at the weekly chart for ETSY, you can see it's been in this very nice uptrend, and now it's hitting the key resistance level. Okay, so you can see it's got the uptrend going, and then it's breaking out of the top of the channel here. And then it's coming over and it's hitting, so you can see the top of the channel, and then it's busting out of the top of this multi-year channel, and then it's also breaking above this 2015 high close resistance for the week, and then the next big level is back here in April of 2015. This is the all-time trading. This is all the trading in the history of this stock, and so the highest closed ever is where this red line is here, around 2750. So if it can close above that for the week, that would signal it wants to break out higher. Then it could run up into the 30s. You can see the all-time high is up here at 36. If it stalls out here, that could signal a temporary top. Okay, if the candles work back into the bands, you have EMA4 at 2231 is the key level to hold. It's busting through the top of the channel right now. It's looking frothy. It has RSI at 78 and Fasto at 90. So there's not a lot of juice in the tank to keep pushing higher. So so keep an eye on this zone. This could signal a temporary top. Okay, let's look at TVIX. So volatility is running. It closed up another 9% today, so 9% more today after the gain yesterday. So congrats everybody that's playing volatility on the Fed speaking week. This was a good week to play volatility with the Fed speaking and the markets at very elevated levels. So you have 52 now on RSI, so that's heating back up. Fasto's back above 20, and so it did bounce down here off of this 50-day simple moving average at 668, and it got back above the 100-day simple moving average at 748 yesterday, and above the EMA4, the pink line. And then today it closed above the lime line and the orange line. So really nice close above EMA's 4, 8, and 13. All it has to do is break one more line. It needs to get above the middle Bollinger Band at 876. If it can close above this dotted purple line, and that would signal it's back in this previous uptrend, is in this nice upward channel. If it can get back above that level and you start seeing it trading above 875 into 9, that's going to signal that TVIX is possibly getting a new uptrend going, and that's when it could head higher. That's when it could really heat up. If it stalls out and it fails to break 875 and break that 9 resistance zone, that could signal a temporary top. It has to be trading above 876 to get a new uptrend going. So this is going to be really crucial on the charts tomorrow. Let's look at CRON. Okay, this is Cronus Group. Okay, so it's looking good today. It closed up 20%. It's at 63 on our side, so it still has room to run until overbought levels. It closed at high of day, so that pushed Fasto up to 100. A crossover here on ADX with plus DI crossing over minus DI. And so today it had a nice breakout above this channel. It had a sideways channel here, and then it broke out above the top of it. And then today it's hitting the closing price on January 23rd. If it can break above that level, the 925 resistance level, then it could head higher and run up here to 11. That was the previous high close on the 8th and the 9th. And so that will be the level to break. So above 925, we should see it heading up towards 11. 11 will be the big top level. If it can fails to break this 925, it could signal a temporary top with this candle pushing through the upper Bollinger Band. So this is a huge level on the chart. It did have giant volume today. Now, if it closes above 11, that's going to be really bullish, signaling that it wants to head higher. Notice that MACD's heating up down here on both time frames. Okay, let's look at RIOT. So RIOT closed up 6% today. It is still at overbought levels on Fasto down here below 20. RSI is at 37. So it has a downtrending channel. It topped out here in December, and so it's been heading down. And as you can see here, it's been it bounced off the bottom of the channel. Hit the top of the channel here, and then right now it's sort of in the middle. It's hitting the 200-day simple moving average at 942 support level. That's the red line. If it drops below that level, that's going to signal downside risk, and it could drop down there to the 300-day simple moving average at 734. That is lining up with the descending support line at the bottom of the channel. So if it drops below 942, you're going to see a drop likely down to 734. Now, if it breaks, it did close today above the EMA4. That was what needed to happen at 1034 or 1039. If it can stay above 1039 and break above 1108, then it could get going. It's going to be all about getting back above the middle Bollinger Band at 1291, breaking through this red descending resistance line and getting a new uptrend going. Okay, so if you see it drop below 1050, that's going to be, let's say 1039, 1040, that's going to be a red flag. So yeah, with the news out that there's the investigation on the cryptocurrencies that came out after hours today, and RIOT was specifically mentioned. That was one of the ticker symbols that Seeking Alpha put, at the bottom of their alert. It's just going to be interesting if more people sell tomorrow, if it's going to be a selling event. So be careful with the crypto stocks tomorrow. Okay, let's look at AYTU. So it did have a huge pullback. As you can see here, it was a drop below the middle Bollinger Band, and then it ended up dropping below the 50-day simple moving average. And today it briefly got above the EMA4 at 70, but notice it hit EMA8, the lime line, at 93, and it pulled back. It formed this long upper wick. That's not what you want to see. Okay, so that signals signal dilution, profit taking. It failed to close above EMA4, so it was a signal that it's a risk to hold. It could just continue this downtrend. Even though it bounced, it closing below EMA4 signals the bears are still in control. It did form, a white candle today, so it could follow through, but it's all about breaking 70. A close above EMA4, then that will signal that it could heat up. As long as candles are forming below, it is a risk to hold. Okay, let's look at ABIO. Okay, so ABIO closed up 27% today. It did break back above 30 on RSI and back above 20 on Fasto. So this was a dead cat bounce play. It had the big gap down. It formed the white candle yesterday as the candles worked back into the bands today. And then notice that today's upper wick hit that EMA4 just like the last chart, and it pulled back. It failed to close above EMA4 88, so that is a red flag. Many times when you get a dead cat bounce play and you have a big drop, this is the lower Bollinger Band here, the solid purple line. When you get a candle that forms well below and the candles work back into the bands, EMA4 signals the top of the bounce. Why does it signal the top of the bounce? Because of this chart right here, because that's the sell level. Okay, that's why this stock pulled back and closed below EMA4. It's just back in the same, it's still in the same pattern. The bears are still in control. They had the program set to not let it break above EMA4. That's the sell zone. Every time it hits it, they're going to sell and short it and drop it lower. And so that's the same thing that happened here. So they pulled it back below EMA4, signaling they're not ready to let this thing head higher. It's a risk to hold overnight. The one bright side, okay, so there was the silver lining. It closed above the bottom of the gap at 75. So that's the big level to hold. If you see it drop below 75, that's going to be a major red flag. But it's still a red flag. It didn't close above EMA4. It's still in play if you were holding it. Just 75, gets below that, that's going to be a major risk. It's going to be dropping below that lower Bollinger Band and then below the bottom of the gap level. And so there's a gap between the bottom of this candle and then the top of this candle right here. And so yeah, it could so basically you want it to break above EMA4 at 88 to signal that it wants to head higher. Okay, so if you look at the 15-minute chart for ABIO, you can see here this is the gap, this is the top, this is the bottom. So today it broke out above the top of the gap, and then it hit this 100 simple moving average, the gold line, and notice how it's formed this descending resistance line. It has to break this pattern. They're walking it down, and so it's just been it's just being shorted on the way down. They're just stair stepping it down lower, and so this pattern needs to break to the upside for the bulls to get it heading, to get it headed back in the right direction. And so the big level to break is going to be this gold line. So if you see it above the 100 simple moving average at 86 on the 15-minute chart, that's going to be your big signal. Okay, it's finally ready to head higher. Notice it's lined up with the middle Bollinger Band. If those levels continue to be resistance, you're going to see the 50 simple moving average at 73 tested, and that's the huge support level. If that breaks, that's going to signal major downside risk. Okay, let's look at LPCN. This closed up 25% today. It's at 63 on RSI. It's a nice crossover on ADX. So this is the same type of play where it was a dead cat, bounce play, where it had the big drop, the big gap here, and then it worked its way down. It found support, and then now it's working its way back up to the bottom of the gap. And so this red line is the bottom of the gap level, and notice how that's lined up with the 50-day simple moving average. So if it fails to break above this 208 to 215 resistance zone, then that's going to signal the top of this bounce. If it can close above that level and turn it into support, then it could run up and fill the gap. A gap fill would line it up with the run all the way up to the 100-day simple moving average at 287. So it did close well above the upper Bollinger Band today. And candles are riding EMA4 support. If the candles work back into the bands, you just want to see EMA4 at 158 hold. If it drops below, that would signal the chart is cooling down. This has really big volume behind the move today. Okay, now let's finally look at NIHD. And so this closed up at 5% today. Now, notice how RSI is topping out, and that's why we always look at RSI. It signals how much juice is left in the tank. And as you can see here, it's getting pretty maxed out here, and then Fasto already triggered the pullback. Notice how when it was heading higher, the Fasto was staying above the red line. Today, the black line dropping below, that's a red flag. Also, having the black line, drop below 80, that's another red flag. So just signals that the chart is cooling down. And another signal the chart's cooling down is the black candle. This is a signal that even though NIHD was up on the day, it closed below the open. The open is up here and it closed down here, and so that's just a signal that the bears were actually driving it lower, even though it was still up 5% on the day. So following a multi-day run, this is a signal of profit taking. The candles are likely to work back into the bands with this type of pattern, and so what you want to see is EMA4 at 114 hold. That's been holding during this push higher. If that breaks, then you could see the 300-day simple moving average at 96 tested. Now that's above $1, you want to see it stay above that level. Now it could keep pushing higher. It's just usually when you see a black candle like this, it's signaling a temporary top. Now if you look here finally at the NIHD 15-minute chart, you can see here it's got this really nice channel today, or multi-day channel. It broke out. So if you look over here on the 22nd, it had the classic tight Bollinger Bands with very, very low volume, no volume at all, and then boom, volume showed up. It broke out above all the moving averages, and then it just got cooking, and it formed this nice upward channel. Volume died out again as it pulled back, but boom, volume showed up again, and it pushed it higher. Well, today it had the black candle, and they drove it down. So the big level is this ascending support line, this green line here. Notice how it held on the pullback, and so it's right at that level again. So if it drops below the 125 level, that's going to be your big signal that it's cooling down, and that's when it could drop down to the 100 simple moving average at 110. It's lined up right now with the 50 simple moving average at 123. That is the big level to hold. Okay, so if you see it drop below 125, 123, that's your signal it's cooling down. If you see it break above 130, that's the middle Bollinger Band. That's going to be a signal, okay, yeah, it looks like it wants to head higher, and then you can see it run back up to the top of this channel, which is currently off this chart, so you'd be up here. So you'd be looking at a run, up to 175, $2, but it has to get above 130 to do that. Notice that it did have a triangle pattern here. So you have the descending resistance, right? And then you have descending resistance, and then you could say you have horizontal support here, and so this is what we call a descending triangle. All right, and so notice how it started up here, and then it's pulling back, and then it's dropping, and so now that this candle is tightly wound in between horizontal support and descending resistance, and so either the red line or the green line is going to break at the open tomorrow, and so a break above the red line, which is 130, signals it's going to head higher. A break below the green line, which is 125, signals it's going to drop lower. Many times a descending triangle is a continuation pattern in that direction, and so it's likely to head lower. That's what this pattern is signaling. So just keep that in mind. Triangle patterns are very important. You want to put in your trend lines intraday to be able to to see whether or not you want to hold overnight. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis and how to use this information for trading, please come check out our chat. I'll post the link below the video. Thank you.